What's going on, everyone? My name is D. Anthony with evolutiontraders.com. We're going to do a little bit of technical analysis on Tesla. I love to trade Tesla. I'm a day trader, full-time options scalper, predominantly going to be doing some intraday scalps. Day trader. Occasionally, I will hold those overnight kind of swing positions if my position does look good. But what we're looking at here is Tesla. So not a bad day. Pretty much finished flat on Friday. But again, very, very choppy action. We did have a fantastic day on Wednesday. Current price of Tesla is trading at around 182.86. So one thing that I kind of do want to point out here, that Wednesday session where we got that nice little gap kind of in go here, we did get back into the channel here, got over the 5-day moving average, but kind of stopped right here at this 10, right? If you kind of look at this blue line here, stopped right at the 10-day moving average. It was a fantastic move. I know myself and a lot of other traders made some really, really good trades on Tesla to the long side on that Wednesday. Now, Friday, we did have a little bit of choppy action. We did kind of push higher over those Wednesday's highs, failed to hold that level over the 10-day supply zone. So one thing that I kind of do want to point out here, this is a little bit of a two-sided trade depending on what the overall market's going to do. If Friday was just a pause day on low volume, just due to the fact that we're coming off a short week, it's a holiday week, there's not too many players in the market, then I would expect anything between a flat to a small red open, trap those early shorts off those Friday positions, and then go red to green. What I'm looking for here on Tesla is going to be very, very simple. Anything over 185, I'm looking to get long, and then you potentially have some good room here for a nice potential bounce into 190 to 193. So this potentially could be an amazing trade for someone looking to hold it for 2 to 3 days, but we have to get back over the 10-day moving average, and we have to hold. The minute we start to lose this 10-day moving average, let's say, for example, we do open flat, we trap those shorts, and we do kind of push higher. If we do not hold that 10-day moving average and then we lose it towards the end of the day, that's where risk comes off the table, and I would not be in an overnight swing position on Tesla. Now, if we are looking to kind of go to back down to the downside, you're going to have a little bit of room. Experienced scalpers only. Anything through 180.73 is going to have room down to around 178. So you got about $1.30, $1.50 worth of room there. Obviously, your bigger trade would be if Tesla was to re-lose 176.50. Does have a nice gap to fill here, all the way back down to 169. But again, anything can happen. You just need to be prepared to react to price action. Now, even though you can kind of do your technical analysis and look at your charts, you never want to have such a strong bias to where you feel that, hey, the chart looks good long over Friday's highs, but then yet if we do lose this area, you're sitting and not taking the short position. Or if we do lose the 5-day moving average, you're still waiting for the long position. Again, just react to the price action. There's no sense in having a bias if you're not going to kind of navigate through and adapt and change that bias to react to the price action. Because the longer you stick to just one bias, for example, you come into the market long or you come into the market short and the market is doing the opposite, there's money to be made on the opposite side. So you have to be able to adapt and take those moves to the upside or to the downside. But even though you do have a bias, doesn't necessarily mean that you are wrong or you did something wrong in your research as a technical analysis kind of chartist. But what I'm trying to tell you is that even though for me, if we do open flat or a little bit red and we trap and then we do take out Friday's highs, yes, I'm looking to go long. But if we never do that, let's say we open up flat, kind of trade around sideways, make a quick initial peekaboo pop here and then start to roll over, does not mean that I'm not opposed to taking a short position on Tesla below that 180.46 and then looking to clear that position right around that 178. Plenty of room for me as a scalper with my position sizing to make some money on that $1 to $1.50, $2 move. I hope that kind of makes sense. Again, your macro flush on Tesla is if we do lose the 5-day moving average, that price is 176. Your long position is over 185.50, 185 in that area. Again, profit potential here on Tesla to the long side, 193. Profit potential through 176 is going to be back down towards 172 and then 170. And then below that, we'll kind of take a look at these recent lows here of 166. But again, we need to get there before we start making assumptions. I hope this video helps. If you guys do like this kind of technical analysis breakdowns and you want to trade with other people who are doing the same kind of thing on a day in and day out basis, intraday, predominantly trading these options, make sure to join the Discord, link down in the description box below. My name is D. Anthony, and I will see you guys all on the next video.